Okay, let's give this a go. Take 5. Alrighty, welcome to the weekend video, and here's a familiar mug again, and give it another shot and see if I can get this in one take, eh? Right, back with another weekend video after last week's hiatus. Let's see what we can make of the action this week. I'm going to start with Eurodollar here. This is the 4-hour chart as usual. Interesting point that I want to make about this. We either have a second wave. We've had a nice decline off this the recent high, which is good. It's welcome. Forgive me as well. I'm sucking on lozenges, and I am in bad health, so no change there then. Okay, so we have a possible second wave high in place, and we have 5 waves down from that high. Now, the caveat that I'm working with at the moment, could be a possible alternate account, is there a larger second wave underway here? That's always kind of the, let's say, baseline alternate scenario for a correction. Is this correction going to extend? For the moment, we've got 5 waves down. There's no major, let's say, hint or factor that would hint that at the moment that this second wave is going to expand. But I am just cognizant of the fact that this move, let's say, off the, what would you say, the 21st of October high, could be called a 3-wave flat. So it could be 3, 3, 5. So this could be an A wave, B wave, and we'd work on a larger C wave. I still think we'd probably, even in that scenario, we would probably top out to 112.80, 113 maybe, and then go lower into wave 3. But it'll be something to watch for next week. Okay, so the hourly chart. For now, we've got possible expanded flat wave 2. We've got the little rally back up into that little resistance zone here between 110.90 and 110.73. So kind of got a that's the kind of the basis of a 110.73 is like the, let's call it the left shoulder of this pattern, and that's the 3-wave possible alternate account there. 3 waves down. Could also be wave 4 of C. So there's 2 ways to view that alternate as well. But I'm interested in that the idea that, let's change that right now. We could get a higher C wave, and this would be a wave B. So let's switch to that at the moment. So for now, we've got a reasonable 5-wave decline. We've got a possible expanded flat. Not sure this little run up here is complete just yet. Probably want to touch that 110.73, maybe up to 110.90 before turning lower down into wave 3 next week. So we want to watch if this final leg up in wave 2 completes around that band of resistance and then head lower into wave 3. If we break above that band of resistance, I would probably start to seriously consider the alternate account, especially if we make some sort of impulsive move higher and then a 3-wave correction. So we're in a kind of a pivotal moment in Eurodollar right now, so let's kind of keep an eye on that early next week. Even if the alternate account is, the actual what's actually going on here, we'd probably be able to pinpoint some sort of let's say opportunity up into wave C if we get some sort of bullish higher low there. Okay, so pound dollar. I changed to this 4th wave, and yeah, there you go. That's another hint, obviously, that maybe something different is going on in Eurodollar also. If this is in fact a 4th wave, well then that would suit the alternate account in Eurodollar better as well. So we would expect another run up in cable, another run up in Eurodollar, and I'm expecting a turn lower into dollar yen anyway. So that would kind of be some synchronicity there. Okay, cable wave 4 seems to have finished, and we seem to be moving up into wave 5, but we can't confirm that just yet. Let's get into the alternate count there, or sorry, the hourly count. So that's the 3-wave correction, pretty standard. Wave C didn't quite meet the lower trend channel, but we broke the wave A low, so and we had a nice little spike off that low as well. So far so good. You could take wave 1 at that high, but you could also say wave 1, 2, 3. This could be some sort of triangle within wave 1, and then this final high here could be the final high of wave 1. But that'll change. You know, if that's the case next week, then we'll change to that. But for the moment, we could be moving higher next week into a third of wave 3 of 5 of C. So next week will probably be the last run up in cable before we turn down longer term. Okay, dollar yen. You can see that we're turning over into this triangle that we've been tracking for a while. Get you over there. That's not where you're supposed to be. So we're moving down into an ABC pattern in a triangle. So let's just kind of update this chart here while I'm talking, or while I'm not talking even. Looks like the initial move down in wave A here, it could be a 3-wave move. So this overall correction in wave E could be 335, so flat. It could be a flat pattern in wave E to complete the larger wave B. The trend channel here, or the trend line here, still suggests somewhere around 106, the low 106s to complete. So we're still working on wave A. So let's get into the hourly chart here, and we have 3 waves down into wave A of A yesterday, and we're looking for this kind of correction higher in wave B, and that seems to have come about today. So we've got it's hard to know, is that 3 waves up in wave A? It most likely will move slightly sideways to slightly higher next week. So some sort of correction in wave B, so 3-wave correction in wave B, and this should top out below 109.50 or 109.40, let's say, and then we'd head lower into wave C of A. So that would complete ABC down in A, and then we'd work again sideways in wave B. So it's going to be, let's say, a choppy and uninspiring next few weeks if this count is correct. And that high there at 109.49 must hold for the moment in order for this count to remain valid. So let's keep an eye out for a little bit of sideways action early next week into probably Wednesday, and then head lower again into wave C of A. Okay, so stock market up to new highs, dangerous new highs, I believe. But I've said that enough. I think it's just worth kind of tracking on the short term what I think is happening on the long term anyway. So we've hit that wave 1 equals wave 5 here. So that's this 5th wave, or the larger, let's go into the daily count. The larger wave 5 in red here. So we've got wave 1, 2, 3, probably a triangle here, 4th wave into wave 5. So the count in blue is a 5-wave move within wave 5 red here. So the wave 1 red equaling wave 5 red, that came about at 27,770. So we've hit the target on a longer term. So wave 1 is the initial move off the 2009 low. So this 5th wave here caps off a 10-year bull market. So let's get into the 4-hour chart. So this is the 5th wave within wave 5 red. So wave 1 and wave 5 have also hit equality at 27,736, and we seem to be just punching up to create some sort of a final 5th wave within wave 5. Let's get into the hourly chart, and you can see how that's moving along. We had a possible running flat there, 4th wave early on in the week. and then a punch up higher to a new high in wave 1 of 5. So this would be wave 5 of wave 5 green. If you're following this, you're doing very well. Okay, so we have a rally out to a new high today. So this is most likely wave 3 of that final wave 5 gray. And then we should correct probably early next week in wave 4. Or wait, it's still, oh, what time is it over beyond? It's about 1 o'clock. So we could start correcting into this evening. A lot of people don't want to hold positions over the weekend, so especially that kind of spike high that's happening right now. If we start selling off into this evening, that'll most likely be in a fourth wave or kind of a grind sideways in a fourth wave. So we'll be watching that. If it is a case that wave 4 will begin soon, it's most likely got to finish below 27,840, or sorry, finish above 27,840. So wave 4 and wave 1 shouldn't overlap. So we need to find a top for wave 3 first. So wave 3 and 4 and 5 next week. I think the air is very thin up here, and there ain't much left in this one. You can mark my words on that one. So I think we should cap off a further 5-wave rally sometime next week, most likely towards the end of the week, if we're going to need a third wave, fourth wave, and fifth wave. So yeah, let's give it the rest of the week next week and see if we top out and turn over. The first level to look for in a turn lower again would be at 27,500. That fourth wave there. Below that again, we're looking at about 27,100 in this area of these swing highs. And the critical level would be, well, it'd be way down here at 25,753. Sorry, 743. For the moment, won't have to concentrate on that. So next week we're just looking at a topping in wave 5, and we'll kind of track it as it's going. If you're tracking me as I'm going, okay. So let's move on to gold. There's the 4-hour chart in gold. We've got we'll call it a combination wave, ABC down in A, triangle wave B, and then most likely 5 waves down in wave C. And if we go into the hourly chart, we can see how that's traced out. So A, B, C, well, I'll get rid of those guys. A, B, C down in A, and then with this kind of elongated triangle here, A, B, C, D, E in wave B, and a possible 1, 2, 3, triangle 4, and the last punch down into wave 5. There's a few different ways you could view that. There's also a short-term alternative, which might view these highs at the moment as the high of wave 4 with one more low in wave 5 to happen. I'm just bullish right now in general, just because everybody else is so damn bearish. So that's just kind of naturally how the way it's just the way it just turns for me in my mind. Just once everybody starts screaming, "Get out!" I walk in. At the moment, we're up off the extreme low of wave C. You could make the argument that that doesn't count very well as 5 waves up, but it could be leading diagonal, so I have to leave that open. Or wave 1 could still be underway, so I have to leave that opportunity open as well, or that kind of possibility open as well. If wave 2 is underway, we could get one more a clearer 3-wave pattern. We could get one more little punch into the low early next week, back towards support again. So that would create a clear 3-wave pattern in wave 2, and then we'd move higher into wave 3. But in general, given the kind of state of mind across the board, the extreme complacency and bullishness in risk assets, or you could call them, I suppose you could call gold a risk asset as well if you're risking capital. But bonds, stocks and bonds in general, especially index funds, just the way they're so top heavy right now, and people are just so damn complacent about it, that does lead me to think that there is another run up in gold to come, because this lofty heights in the stock market cannot last. Okay, so next week I would like to see 5 waves up. I'd like us to stay above that 1445 low, and let's keep on trucking higher in 5 waves to create a bullish signal. It's always the aim, really, isn't it? Bullish or a bearish signal. Okay, let's get on to crude oil, and it looks like this correction just continues and continues. I still think it counts best as a correction. It's probably some sort of triple combination wave at the moment, but we still have a pretty reasonable wave 1 down, a 3-wave pattern, wave 2, and a nice spike lower again in a further wave 1 down. So that does lend itself to this move off the most recent low, excuse me, as a second wave. So let's get into the short-term chart here, the hourly chart. I was moving towards the let's say the bearish outlook yesterday evening, but that's been proved wrong today as we spiked above that final wave C again. So I still think we're tracking this kind of the last lurch of wave 2, and we'll probably come to an end quite soon, given the fact that this triangle has kind of elongated here. So that's probably wave 4, and we spiked higher again today, so that's probably wave 5 of C. We're still within that, we've come to pretty much a dead halt over the last week, below this 57.80 level. We're right in that. It's interesting that the triangle has kind of oscillated around the 50% retracement level as well, and we seem to be spiking higher up towards that 62% retracement, so that's 58.73. The trend channel it's still kind of covering the action pretty well. The corrections take time to play out, and I think this one has pretty much shot its load right now. There ain't no ammo left in this rally, I'd say, and especially if we're getting a top in stocks next week. There's no way that crude rallies along with stocks, or sorry, crude rallies while stocks crash. And I think they're locked at the knee in that way as well. If crude goes down, stocks will follow it lower as well. Over the last year, it's been kind of crude goes first, and then the stock market seems to follow its lead. So let's see if crude goes first next week. If that happens, we'll look for 5 waves down again to give us that bearish signal. And my voice is going. Okay, let's get into the stock market before I can't talk anymore. The S&P, so the broader market. Again, the 4-hour count is chugging along in wave 5 in blue, and we've pretty much come to the end we've run out of steam in this rally. You can see we've got divergence. We've got this. Well, it's not stark, but we've got a pretty reasonable divergence in the MACD line here over the last 3 months, 2.5 months. The September highs into the October highs, a lower high, into the recent early November highs, and now we're back lower again, even though the market kept, despite corrections, it kept punching higher. So overall, we're topping out. There ain't much steam left, as I said. Let's get into the short-term count and see how that's going. So wave 3 came along today. That action proved to be corrective, as we were suspecting last night. So we had a very choppy second wave and then a spike higher today in a third wave. So this is wave 3 of 5 of 5 of 5 of 5 of 5. I'm getting sick of saying 5 now in general. But this wave 3 of 5 is it's getting up towards that upper trend line there. So we'd expect that to kind of top out soon enough. What are we at now? 31.14. We'd hit that upper trend line about 31.23 or so. That is to say that it doesn't have to actually get there either. So long as the price hangs up above that wave 1 high, which would be about 3100, we should start correcting now in wave 4 of 5. So wave 4 should hang above 3100, and then we should again punch one further high up to about 3130 to complete 5 waves up in wave 5. The sequence is there, you can read it. Okay, final 5 waves. As with the Dow, we'll just track it as it goes next week, and we'll see where we come in. 3100 should hold for the moment. If we get a break of that, we'd start looking lower again. We have this 4th wave low here at 3076. We have this wave 1 in gray here at 3047. So that previous high at wave D here came in at 3021. So in general, we want 5 waves up to complete, and we want 5 waves down to begin, and that should round us off nicely to begin the next push lower. And I think the push lower should come before Christmas. People do tend to say that Christmas time is a rally time in the stocks. It wasn't last year, not in any way whatsoever. The new year came the rally, but for the moment, I'm concentrating on a top out pattern and move again down lower. So let's get on into silver. We were, I must update that 4-hour chart again. We were tracking a triangle, and now we're tracking just a combination, normal run-of-the-mill 4th wave correction. We still, the general patterns still suggest another rally up in a 5th wave. And I still haven't discarded the idea that this could be a 4th wave at one lower degree, so which does suggest even a higher degree rally to come. But for the moment, tracking the end of wave 4, and we should begin wave 5 if we haven't begun it already. Let's get into the hourly chart. I have a nice move up, and we've got 3 waves down in a possible 2nd wave today, and the market is pushing a little bit higher today, this evening, back towards that $17 level again. So we have 17.10 at the wave 1 high. If we push bullishly above, like if we spike above that early next week or towards the end of the day, there's no reason to believe that that won't be the beginning of wave 3 of 1. So that's what we'll be tracking early next week, is wave 3 of 1. And we've got to hold above 1663 for the moment anyway. Okay, that's silver. Let's get into bonds. We were looking for a run back up to this kind of shoulder of resistance here at 129.42. We got that this week. Seems to be pretty reasonable 3-wave correction so far. So we've popped out over the top. So we have what you might call a throwover in place. And this evening again, we seem to have sold off again, but quite slightly. But we all have to start somewhere. I want to go into the alternate account for the moment, because we could be also, if that's the wave 2 high, we could also be tracking some sort of another flat pattern here, which might top out again at about 132. If this is the case, it could be wave 1 down, A, B, C, wave 2, or it could also be at a lower degree here. We could be talking about wave 1 down into the low here, and then this could be A of 2. So it could be wave 1 down, A, B, C of wave 2 in gray. So a couple of different because we're in a corrective phase, there's always 10 different ways to view a correction, and that's what makes Elliott waves so damn fun. We seem to be always stuck within a correction. Okay, next week let's kind of figure out at what degree this second wave is correcting, and let's see if we get some more bearish action to kind of confirm a third wave down. But for the moment, we're kind of holding bearish. So let's see how it goes. Thanks so much for being with me this week. We'll see you all on Monday. Have a great weekend. Hope I didn't bore you to tears in the video. And God bless. See you soon. Bye-bye.